Shaktikanta Das, lots of big takeaways really. He's announced a reduction in repo rate by 75 basis points, a reverse repo rate also being reduced by 90 basis points. RBI also saying the banks will allow a 3-month moratorium on all loans. Rajiv Dubey is joining us with more on this. Rajiv, to you, the big takeaways from this briefing by Shaktikanta Das.
I think for me the biggest was of course the moratorium. The moratorium of 3 months allowed for interest payments is a huge thing. The other major thing was deferment of interest payment on working capital. Again, a big thing for industry. As far as individuals are concerned, the moratorium, if it applies to housing finance companies, as he says, it will be a major relief for individuals. My only worry as far as moratorium is concerned was that the terminology used is the permitted to allow. Which basically means that RBI has not made it mandatory. It is left to the banks to decide whether that will be allowed or not, and that is a big concern as far as I'm concerned, because that then leaves it to the bank to decide whether they will allow or won't allow. The other major thing is of course the liquidity measures, which are absolutely essential, but do not matter very significantly under the current circumstances, because almost everything has come to a standstill. The economic activity has come to a standstill. But as and when the economic activity triggers, starts after this 21-day lockdown period, it will be huge. 3.7 lakh crore worth of liquidity measures, accompanied by the cut in interest rates, with the moratorium and other measures announced by RBI. I think RBI has really opened the doors opened up its coffers and opened the doors for the economy to function as normally and come back as robustly as possible when the lockdown is taken over.
The focus clearly, Rajiv, in that press conference by Shaktikanta Das, more of a briefing really than a press conference, was clearly liquidity. The markets are responding right now in the green. But I want to focus on the point that you mentioned earlier about the moratorium, allowing the 3-month moratorium on all loans. At this point, it seems very vague because there's no real clarity from the RBI. Perhaps we can get that in a few hours on exactly what this will mean for the consumer. Because as you said, it also, gives some leeway to the banks to decide.
Yes, it is clearly for the banks to decide because of the terminology used. Normally, RBI's the way it constructs its sentences as far as the responses to the banks is concerned. It's normally like an order. This seems like the term used is permitted to allow, which basically means that it's left to the banks to decide that. And so the government banks maybe can be nudged into doing this, and private banks will have to take their own calls. So I guess that leaves a window of uncertainty as far as the consumers are concerned, even industries are concerned about what to allow, what not to allow. In which case, it is quite possible that this may be allowed for loans which are of lower value, maybe not very high value. It may be allowed for people who are who have taken maybe housing loans up to a certain value. So those are the kind of things that will then be left to the banks, and banks will then take a call on whether it will be allowed across the board or only to certain companies and certain kinds of companies, sizes of companies, and also certain kinds of individual borrowers such as home loans, and maybe not for car loans. So those are the kind of uncertainties that remain, which need to be seen. The release is still not out. It will be put up in a while. But as this plays out in the market, these are the kind of complications that arise out of this announcement, apart from the fact that the RBI has given the banks and housing finance companies and all lenders the opportunity to go for this moratorium. Moratorium is the biggest requirement under the circumstances. This is a force majeure event. This is what was required under the circumstances. But the way it has been announced, we need to see how it plays out in the marketplace, because there there's going to be multiple permutations and combinations of this moratorium. Besides that, interest rate cuts, phenomenal. 0.75 is exceptional and will be required under the circumstances. The liquidity that has been allowed will mostly be used, 3.74 lakh crore, as he said, in terms of both CRR, MSF, as well as long-term repo operations by the RBI in the market, will really be useful when the lockdown is removed and businesses come back to normal or the economic activity starts all over again. And when banks will be required to lend to businesses, because after this 21 or almost a month of lockdown, they will require certain funds to kickstart the businesses. That's when that will come into effect. But very essential, good that RBI has done it now. There is no uncertainty about it. Businesses know it. Businesses can approach their banks and prepare for it after the lockdown. So it's all a good, ground for kickstarting the economy and hit the ground running after 21-day lockdown. The moment 22nd day starts and economy and economic activity comes back to normal.
There's no doubt that these were all much needed measures. It was expected that the RBI would make announcements with regards to liquidity, with regards to rate cuts, and also this 3-month moratorium that Rajiv and I have been discussing. We're slipping into a short break. On the other side, we'll continue getting you the takeaways from what the Reserve Bank of India has just announced. In some time, we're also expecting that we'll get a copy of that entire briefing so that there will be more details of really what this means for you.
Hi everyone, Preeti Chaudhary here. Hope you like this video. For latest news and analysis, like and subscribe to the India Today YouTube channel. And don't forget to press the bell icon to stay updated. Thank you for watching.